What's up, everybody? Welcome to another episode of the Bad Talk Show, man. So obviously, there's a lot going on with the news, and the Fed has just shocked the market, and it's our job right now to cover exactly what's going on. So we want to give you the latest update. So I know we talked a lot about real estate, we talked about the stock market, economy, but since there's always moving parts, this is gonna be the summary. So you need to make sure you watch the entire episode. So, bro, let's get into it, bro. What you got for him?
All right, so you guys might have seen the stock market go crazy in January. Like, we had one of the best months that we've ever had in the NASDAQ in January. And why? That's because everybody's getting overly excited about inflation, because inflation was coming down rapidly. And then we got some terrible reports on CPI recently, as well as PCE recently. So it showed that inflation actually might not be coming down how we thought it would. And so what happened was, initially, everyone was anticipating, because inflation was coming down so rapidly, the Federal Reserve, was going to pause interest rate hikes in March. But then Jerome Powell came out and said, hold on, y'all. Like, actually, I'm probably not going to pause it until after May, right? That's kind of what he was getting at. He didn't necessarily say he's going to pause it in May, but it was kind of, it kind of seemed as if he was going to pause it in May.
Right. He was inferring it. You could infer that he was going to do it.
Yes, that's what I was looking for. Exactly. You can infer that. But then we got some data. Data came out, CPI came out, PCE came out and showed like, whoa, job data came out and showed like, yo, hold on. We got a big problem on our hands. So therefore, we might have to continue rate hiking in June as well. And all that is available simply by looking over here at the Fed Watch tool. So we've showed you guys this tool time and time again, but when you look at the data here, this is the official data that people use to see like what type of rate hikes we may be getting going forward. And this data is starting to show that they're pricing in hikes for June as well. That's the majority. And so, Newski, what does this mean for the market if he's going to be rate hiking longer than anticipated?
Yeah, guys, and this is the thing, right? It's not the best thing, because essentially the more you see rate hikes, right, the more impact it has on the stock market, because now businesses have to pay more when they actually take on debt. That's really how it works. So if they can't take on debt because, one, they're gonna have to pay it back more than they were initially, you can't invest as much. Your company can't grow as much. Your profit margins struggle, et cetera, right? And all that impact does not actually relate to the business. It comes down to the consumer, which is us, right? Because if a company is struggling, what they're going to want to do is make their margins work no matter what. So either they're going to fire a lot of their employees, which has been happening already. And if we continue to see these rate hikes, if a company is struggling, that's probably going to continue to happen. And that's not good. It's just not something you want to see, because people are struggling. It's not fun. And then if those employees get fired, one, the company does great, but two, the consumer has to continue to pay more because inflation is going to keep on going crazy. So it's not a good scenario, and that's just not good news, because obviously I talked about stock market, but let's talk about real estate. That's going to impact the real estate market. We just had a whole episode talking about how rates are going higher, but it's only going to continue, which means demand is going to get slower. So it just does not seem like a good look right now.
Bro, not at all. Like you said, like it's definitely shown in the real estate markets, and the stock market is honestly starting to price in upcoming data. So some data that's coming out very soon that everybody should be aware of is, right now, as of this recording, you might have seen the ADP employment data that came out earlier this morning on Wednesday. That came out, and so hopefully that didn't kill the stock market, but only you guys know better than us, because at the time of this recording, we don't know the numbers yet. But there, and the ADP, by the way, guys, that right there is a measure of the monthly change in non-farm private employment. So they're taking data from 400,000 US business clients, and they're pretty much giving you a good predictor of what we're going to get on the official report. So it's kind of like a precursor to the official report. That's going to show you like what kind of employment data we can expect in the official report. And you guys might remember last time we got the official data, we were expecting 225. Excuse me. We were expecting 500. So we were expecting 200 and something thousand jobs, and they came out that there were 517,000 jobs available. So that was like really bad, bro. That shocked the market really badly.
And that's the thing, right? Like right now, if y'all think about it, there's not really much going on that's helping the market. And that's the thing. The Fed sees that, and they're like, yo, like inflation's going high, So that's going to obviously hurt the market. If that means we have to increase interest rate, that's going to hurt the market. Real estate, that's going to hurt the market. There's nothing really that's changing in this world, and it's not good. And the Fed's is going to keep on doing this until we get to the point where something collapses. Or if not collapses, we're going to continue to struggle. So we might not see the biggest crash, right? We might not see anything crazy happening. However, this just means that if the Fed is deciding not to pivot, and we explain what pivoting means, like that means they slow interest rate down or they decrease interest rates, et cetera, et cetera. If they're deciding not to pivot, it just means a slower growth of the economy and the stock market this year. And that's not something we want to see.
Not at all, bro. And then plus, don't forget, on March 14th, we have CPI coming out. CPI. So we're going to find out what the actual inflation numbers were for February. And that everybody's waiting on right there. And then
yeah, that's big.
That's huge, bro. And then not to mention on March 22nd, that's when Jerome Powell is going to actually tell us what they're going to do when it comes to interest rates. And he's going to give the FOMC meeting where he's going to speak about what their plans are going forward. So that's what the stock market is waiting on right now. And that is kind of exactly what we're telling you to be aware of in these upcoming weeks, because it's going to get very serious between the job numbers that we talked about coming out by this Friday, CPI coming out, Jerome Powell coming out March 22nd. When I say that could change the course of everything, it could change the course of everything. So we need you to be very cautious on your investments.
That's a fact. And another thing, if you think about it, bro, is like now it's 5.5%. That what the Fed is saying. It was earlier, right? When we say percent, we're talking about interest rate. They wanted it to be like 5%. They were going to cut it off. Now they're saying it could, we're aiming for 5.5. So that number could change based on what Rel just said, right? If the inflation is even higher, that could go 5.75. That could go to 6%. We don't know. But at the end of the day, you got to protect yourself. And that is 100% exactly what we want to cover. So if you're still watching, let us know what your thoughts are, right? This was meant to be a quick video where we give you an overview, but we always like to have engaging conversations. So definitely comment below and make sure you like this video. It helps the channel out a lot. Please make sure you subscribe as well and hit that little notification bell because we drop
2 videos a week
and you don't want to miss them. We appreciate you. Make sure you check out our video that we dropped on Monday about the real estate market. It's a great video, and make sure you check out our next video on Monday. But until then, peace.
Peace.